You talk, ain't gonna stop anything. What's going on? This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the forex market. This is another episode of Trade with Travis on Tuesday. I have 901. The markets for forex and everything. For forex is already open. The markets for the stock market is actually going to end up opening up in a few minutes. As we get through and kind of get started with everything, I want to make sure that I end up going through the disclaimer, and then after that, talking about some trades that I am interested in for the people that will be watching live. Obviously, you can be able to place in your overall pairs that you would like to be able to take a look at. We will end before 9:30. This is going to end up being a brief one today. Just got a lot of stuff that I have to be able to do, but I wanted to make sure that I end up saying hey to everyone because I haven't been on Trading View for a week or so because I actually ended up getting banned. So it is what it is when it comes down to that. But I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is seek your education, and from the education, you can be able to make your own informed decision. I understand that forex trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money, so please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it is not promised that you can end up making money today. So with that being said, as we go through and take a look at any type of trade that we end up taking a look at, the biggest thing is that I want to be able to take a look at trades that have trending markets only, meaning that the market is in a R2 or R3 ranking, meaning that the market has retraced, giving us a good opportunity to be able to get in when it comes down to being able to get value. Always, 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 before I take any trade, I want to make sure that we end up having time frame alignment, meaning that the weekly and the daily are trading in the same direction. And then after that, then we can go through a three-step process to be able to see if it's a good trade. Is the market overbought or oversold that matched up with that time frame alignment? Is there a catalyst for being able to get in, which is a counter trend line break or some type of economic news to be in depth help being able to help you out? And then after that, there's equity management. And a special today, because this is the first time that I've been back on TradingView. For the people that are watching on TradingView today, if you want to be able to get a chance to be able to get a copy of my trade tickets, which is a manual style of being able to trade, to where you can be able to plug in all of your trades and be able to do it correctly for its account size, for its everything else like that. If you're interested in being able to learn a little bit more about that, type in me. And essentially, all I need you to do is to be able to go to my social media platforms and just click on like and share. If you end up doing that and you end up sending me a message, then I shoot this over to you for free. Now, if you end up going through all three of my social media, all four of my social media platforms, Facebook, Instagram, TikTok, and everything else, all of that is Carter Cow Capital or Trade with Travis. If you end up doing that, then I will end up sending you a copy of the position lot size calculator that you can actually be able to plug in your MetaTrader 5 and actually be able to use that as a way of being able to plug everything in on your MetaTrader 5 without having to be able to touch it. I'm going to show an example of what that looks like right here. Literally, all you have to do is just plug in all of that information, your stop loss, take profit, and everything else, and it will tell you exactly what your lot size is going to end up being. So all I'm going to ask you to do, my call to action for y'all to be able to do is to make sure that you would just click on like, click on share, and then after that, obviously, if you end up doing that and type in me inside of the live chat after you end up doing that, then I send this information over to you via email so you can be able to get all this stuff to be able to have for your personal trading. So let's go ahead and get started. Like I said, I'm going to be very brief today when it comes down to most trading pairs. I'm going to jump into the big three just to be able to talk about it. Then after that, I'm going to take a look at the indices and be able to go from there and see what's happening based off of that. Economic calendar today. There shouldn't be not necessarily anything from what I remember. I'm sorry, never mind. Today's the first fundamentals day. We end up having retail sales to come out from the Eurozone that was negative 2%. We end up taking a look at what's happening with ISM PMI. So it's going to happen in about 55 minutes. That doesn't necessarily rock the market, but at 2 o'clock, FOMC meeting minutes are going to end up coming up. So that means to me, typically when you end up seeing interest rate decisions or FOMC or anything else like that, I like to be able to see that the market is probably going to end up having a big move early when the market's open, consolidate a little bit, and then after that, right around 2 o'clock, it's going to end up making another move based off of those meeting minutes. So we end up taking a look at that. Canadian yen, US yen. Yes, I take a look at those as well as we end up going through and taking a look at these pairs. Let's see. So Here we go. U.S. dollar index. I'm going to be very brief on this. Weekly is still moving up to the upside. Last week, the market broke out of a triangle. It's starting to push up. There's a D extension that's expected to be hit at 13,512. Oh, no, you're welcome. Um, the market has not retraced down to the 38. Well, it did retrace down to the 382, which means that the market is considered to be healthy. So we don't have to worry about an 80-20 rule. The market is expected to be able to go all the way up to that 13,512 area and being able to complete. Now, does that mean that it's going to end up happening this week? No, it just means that the market is primed to be able to move to that direction. We take a look at it from a daily perspective. We can see that the market end up having that triangle in which is right here, broke out to the upside, retested, and then after that started to push up. From a daily perspective, the weekly and the daily are in a uptrend and are in R3 positions, meaning that the market is primed to be able to look for any type of buys, especially if you can be able to get low prices based off of it. So the one thing that I do like is that even though the market's at 43% when it comes down to the stochastic, there is a counter trend line break to be able to get in. If you would have got in probably about a few hours ago, you would have had a great opportunity to be able to get the most out of this market. Currently, right now, I will wait for a 15-minute to see if you can be able to catch it back in the buy zone before actually being able to make a move based off of that. If you do have that, then you have an opportunity of being able to buy the United States dollar index once it ends up breaking a U-turn to the upside. So that's the move right now. I would say wait first, but if you end up getting something like that, then you should be good to go when it comes down to being able to make a move off of that. Type in a wire, yes, if that makes sense for the United States dollar index. What that means to me is United States dollar pairs are probably going to end up being bullish today. It just means that we got to wait for the best opportunity to be able to get into the actual trade from there. Okay, so there you go. Let's go ahead and take a look at what's happening with oil. Take a look at what's happening with oil. Oil's at $99 a barrel, so it's finally below $100 a barrel, which is actually good because I have a truck and oil's kicking and gas is kicking my ass. But from a weekly perspective, the market has fell back inside of consolidation, and because it has fell back inside of consolidation, there's really no trade to be able to take until the market actually ends up hitting support at 95. So oil, I'm not going to end up paying attention to. I'm not going to do anything with. Probably for the remainder of this week, I'll just wait and try to see what's going to happen when the market ends up hitting 95 and being able to go from there. Let's take a look at gold. Gold has hit a daily D extension going down to the downside. Currently, right now, we end up having a strong double top that end up happening. The market has rejected from there because the market has hit a daily move to the downside and has not pushed back up to the upside at this particular point. I'm not going to make a move off of gold either. Obviously, gold has a crossover with the United States dollar, so that means that the United States dollar is probably going to continue to, if the United States dollar continues to get stronger, then gold is going to continue to get weaker. So that's what we have when it comes down to those pairs. Let's go ahead and go through US yen while I am taking a look at this, so that help me out for let me know what's happening with everything else. But so Juan, I'm going to say this, and I'm going to tie this into what I just said with everything else. United States dollar index, we expect that the market is going to end up being bullish. Gold, we see that the market is basically getting weaker. That means to me that when I look at US yen, I expect that the market is going to end up going up on US yen because gold is weak and the United States dollar is expected to be strong. But if we take a look at this from a weekly perspective, we can see that the market is at 36%. That kind of matches up with what's happening with the United States dollar index. We can see that the market is pushing up, and there's a D extension that's expected to be hit at 142.38. However, this market only retraced down to the 23.6, which means to me that it's going to end up basically being hit by this 80-20 rule, meaning that if the market only retraced 23%, then more than likely once it gets up to the 127%, it's going to end up having a little bit of struggle to be able to break out of that. And currently right now, we can see that it went up to 136.37, and you can see all these wicks starting to happen at this particular area that people are basically selling off at. So if this market succumbs to the 80-20 rule, then what's going to end up happening is that the market is going to end up falling down to the B first. It will retest and try to see if it can push up. If it does not push up from that level, then after that, it could potentially fall to the 382 or lower before being able to make a move from there. So currently right now on US yen, if I had to make a decision on what I'm going to end up doing for the overall for buying or selling, The weekly is telling me that the market is going up. The index is telling me that the market is going up. The daily is telling me that the market's in consolidation. So I am going to wait to see how this market is going to end up reacting based off of this area right here. Until that actually makes a move, then I will not do anything until it actually ends up giving me a decision. I don't trade inside of consolidation. Most people lose money inside of consolidation. That's where there's no reason to sit up there and trade inside of that area. You have less than a 33%, excuse me, you have a 33% chance of being able to make money inside of consolidation. There's no reason to be able to trade inside of that area. You just wait until the market actually ends up making a move from there. Type in a Y, yes, if that makes sense. And I'm going to go ahead and go to CAD yen and be able to go from there. Anybody else that's watching live, for the people that are watching live at this particular point, you have another pair before I start getting into my bag, which is the indexes, then we can go ahead and talk about that as well. Um, Weekly, when it comes down to CAD yen, I'm going to be very brief on this one as well. We can clearly see that the market, from a weekly perspective, has been pushing bullets as my son ends up popping in.
That's a counter picture on you.
What?
Hey, Dad, there's a counter picture on you.
Caterpillar. Say hey to everybody. I'm live.
Hey, everybody. I'm
No.
Miles.
Well, you're going to be live. You got to say hey. Okay, good. There we go. We take a look at the weekly. The weekly is in an R3 position as well. The market has been pushing up. Why did the market push up? Oil got strong. What's happening with oil right now? Oil is actually getting weak. What's happening with gold right now? Gold is actually that's my youngest son. Gold is actually getting weak. So what I think is going to end up happening with this market, I think this market is going to end up being stagnant. I can kind of see the early beginnings of a flag that's actually being created when it comes down to this movement. Go in the kitchen. Go. Good morning. It's your time giving you secret stock tips this morning. Always, always. Every time that I'm in a live, in a live, they always pop in. It never fails. So I always embrace it. That's the reason why my company is called Carter Cow Capital. It's my son's. So it is what it is. Let's take a look at it from a daily perspective. Kind of seeing something like this. Not necessarily the greatest looking one in the world, but I am seeing somewhat of a triangle at this particular point. The reason why I'm showing this and the reason why I'm drawing this is mainly because on the United States dollar index and on gold, both of them are showing the same. Both of them are showing the same thing. So this triangle is we call this bearish. It's more symmetrical. So as long as we end up having this triangle when it comes down to overall movement, that goes back into what I end up saying about consolidation. I'm not going to end up making a move inside of this area. I'd rather for the market to be able to break out to the upside or to the downside before being able to make a decision. Once that ends up happening, then after that, I end up having a chance to be able to do something with it. If you are trading this, if you are in a overall pair, if you bought it or sold it, especially if you're in the middle of it, Juan, I would just say, hey, just stay in it, and then after that, allow the market to be able to make a decision on what the market is going to end up being. Now, if you over leverage your account, then you may want to see if the market gets you back to break even to get out, and then after that, wait for the market to be able to make a move. But until then, I would not do anything off of this move yet. Let's take a look at CCL stock. It's a cruise line. Okay, cool. Let's see. I definitely want to be able to talk about United States, US 30, NAS 100, and everything else before we end up getting into the Consumer Carnival, New York Stock Exchange. Take a look at it from a weekly perspective. Okay, so obviously, clearly, the market has been moving bearish, just like most stocks have overall when it comes down to what I've basically been looking at. If we end up taking a look at this from a field perspective, there goes your A, here goes your B. Let's see. Market ended up going to the 618, fell down and completed the extension right there. So there goes your new A and B right there. So A and B. Market went up to the went up to the 50, completed the extension at 3207, but the fractal was not until down here. So here's your new AB, which is right here, all the way down to here. Currently, right now, the market has retraced to the 382. The market is basically hitting back, um, basically at the bottom of what a market ended up making to be. If this happens, then it's going to end up making somebody help me out. Answer this question. If this market ends up bouncing in this area, what formation would you end up seeing? What overall chart pattern would you end up seeing? Anybody? Somebody help me out on this one. We got a few people live, and I know that a lot of people know this overall move, but let me undo it real quick. Tell me what you end up seeing. What formation? Gonna give everybody another 5 seconds for you to answer that question. Okay. If I'm looking at it from this perspective, what you probably end up seeing is something like a double bottom. Market end up bottoming out right there, push back up. If the market ends up holding and then starting to find support right here, then after that you end up seeing a double bottom from that area and then start having to push up. The one thing that I noticed from the weekly perspective is that this market is in a high volume node, which means that you probably might end up seeing the start of consolidation. The only thing that I personally don't like is that it's at the bottom of the consolidation, especially if you're buying. Especially if you're already in the stock. Um, if you're already in it, based off of this movement, it could potentially end up going lower based off of that. But if it does hold support, that's a pretty good move for it to double bottom. Taking a look at it and also it doesn't hurt that the daily is in the doesn't hurt the daily's in the buy zone. Taking a look at it from a daily perspective, we have our large field. Let's take a look at our sub field real quick. Obviously, the market is still pushing bearish, so that means that we end up taking a look at it from that perspective. Steve, answer this question. Are you just looking at this for an opportunity to be able to get in? Or are you looking at this as I'm already in and I'm just trying to figure out what's happening? Okay. Buying or selling? Okay. Gotcha. So, a couple things that's going to happen. One, and I'm showing reasons why I think that the market could potentially end up going up. One, the daily sub field but just hit a daily D extension. That means to me that we probably might end up seeing that this market may end up having a retracement from this actual spot, starting to push back up. Now, we don't have confirmation that the market is truly ready to be able to make a move yet. Everybody, give me 1 second. Okay. Back to what I said. The market hasn't given confirmation that the market is truly ready to be able to make a move yet. But if I'm taking a look at it, I would, if I'm being conservative, what I would end up doing is waiting for the market to be able to break this innermost trend line. If it breaks that innermost trend line, then it start giving you a little bit of movement to the upside. Then after that, I'll be way more interested in being able to get in. From a from a bond profile perspective, it's still showing that the markets probably may end up pushing bearish, and being able to go from there. Um, so essentially, what I will end up doing, Steve, is that I'm just waiting. I just wait to see how the market will end up reacting until it actually ends up breaking, from this counter trend line break. From this actual inner trend line. Now, from a volume perspective, if we're looking at the last few days, the volume is in a good pocket for it to keep on moving up. In pre-market, I expect that it may end up going up to at least 961 before being able to have a little bit of a retracement. So what I think will probably end up happening is that the market will end up pushing up. It will probably end up struggling just around here, have a little bit of consolidation. If it breaks to the upside, right above $10, then after that it will push up to 1042. Probably will end up struggling again, and then after that start to push up again from there. If you look at how that kind of matched up with everything else, we have this strong consolidation. We had this free run area right here, and it's the same thing. We got free run space right here from the low volume node, and we have consolidation. They end up leaving from that. Now, hopefully that answers your question. Hopefully that answers your question because that kind of leads me into what we're going to talk about with US 30, NAS 100, and everything else. I want to talk about this before the market actually opens because I'm going to end up placing in two pending orders. I'm going to talk about NAS first. I'm just going to look at it from the 15-minute perspective because I want to prove a point. One, the market overall has been proven to be long-term bearish, at least short-term bearish overall. I think that the market is going to end up going in that perspective. However, we are in a retracement portion of this movement. Plus, we are in July, and July leads to a lot of consolidation and breakouts. So, if you look at it previously on the 24th, the market ended up going into consolidation, fell into a lot of free space with this low volume nodes. Then after that, showed a lot of consolidation again, and now it's basically back in that same current pocket where we end up having that free space a few days ago. Now, it's not surprising that the market is in consolidation right now when it comes down to that movement. The one thing that I do like about this is that if it does break out of this area towards the upside, then you have a strong move that you can be able to go after to at least 11,960. That'll bring in about 150 points of overall movement that you can be able to get into if the market does pop up. Now, if the market breaks back down to the downside, then that means that we're going to be back inside of consolidation. And it just means that we need to wait until we end up getting more of a free space when it comes down to that movement. So if I'm anybody at this particular point that is watching inside of this room, what I will end up saying is this. I will place in a buy stop order. I'll place in a buy stop order just on the outside of the overall highs of this market, right where the low volume node truly shows that it's about to start. I'm going to zoom out just a little bit more. The low volume node will end up, or the low volume node will truly begin right around 11,840. So anything above 11,840 will end up being one of those areas where I would love to be able to scalp at if the market ends up breaking out and holding that position. My stop loss will end up being inside of the consolidation area back at 11,760 with the hope that the market is going to end up breaking out of that area. So that will be my stop loss will be just below the point of control of today. And then after that, take profit will end up being at 11,960 for what's the overall area where I would like to be able to get out potentially. Um, let's see. I'm in long on this cruise. Hope cruise season is good for taking cruises. Yeah, I think that it might end up being. Obviously, when you look at the stock market, anything else like that, more people are more interested in buying than they are selling. So I always lean to having a good buy based off of that movement. But I am going to end up looking at being able to place in a pending order at 11,840, and expecting that it's going to go up at least up to 11,960 for us the spot for us NAS. Now, um, that is move number one when it comes down to this for that breakout. If it breaks out to the downside, then I'm probably not going to be looking at being able to make a trade on it. But if it does move up to the upside, that is the idea for today. Free space run up to 11,960. Okay. Now we're getting that same movement off of NAS 100. Now the problem with US 30. The problem with US 30 is that when you look at it from same deal, we're still in this high volume node. And because we are in this high volume node, it kind of makes it kind of hard to be able to say, even though if the market breaks out of this area, I am truly interested in being able to take a long-term trade off of this movement. This is still, it's a large consolidation inside of a smaller consolidation area, which is right here. If this market does break above 3185, so let's say if you want to be very safe on this one, anything above 3100 will end up being a very solid move to be able to get into. But if I'm doing that, I will only look at being able to get out at 31,250. I'm not as confident in being able to say that this market is ready to break out yet. So US 30, I'm not going to end up making a trade on. I'm just putting it out there. I want to see how the market's going to end up reacting in the next 5 minutes before being able to make a move. Last one, let's take a look at XPX 500. This will be the last one that I will take a look at for today. And then after that, we end up moving forward, and hopefully everybody ends up having a great trading day overall. Where's my XPX 500? Matter of fact, let me go to my idea. So I did a case study on this on my when I ended up taking a look at this a little bit earlier. Really ended up pulling up that chart so everybody can be able to take a look at it because it's basically doing the same move and it's showing the same thing overall. Um, so literally, volume profile, if you use it correctly, will end up giving you a roadmap to what's going to end up happening in the market. And I'm just going to prove a point before the market actually opens up in the next 4 minutes so I can get out of everybody's hair. But literally, June 20th, market was in consolidation for 3 days. Ran into a lot of free space for its low volume nodes, pushed up 100 and something points. Went into consolidation again, left out of this high volume node, exploded up to the upside. Went back into consolidation, exploded back to the downside in the same area of this open pocket that's on this right hand side. Currently, right now, we're in a larger consolidation, but we're breaking out more to the upside. And if the market remains to be bullish, then I will be interested in being able to take a trade right around 38.50. It'll be right around 38.50 where I will look at being able to get in if this market ends up breaking out. That will be the start of the high volume nodes and above all of the pricing of where the market was in consolidation. So if I'm looking at being able to make a order, it will end up being a pending it'll be a pending buy stop right around 38.50. Yep, 38.50 with the stop loss of 38.17. 38.17 will be slightly below all of these overall lows because we have a little bit more consolidation inside this area. And I'm going to zoom in just a little bit more. Let's see, 17 was hit, so I'm going to have to go below that. I go 38.05. What's going on, Casey? Another day one. What's going on, Casey? Hope everything's going well with you. 38.05 will end up being a stop loss for that pending order. And if it does run up, then we have this open pocket space up to 3,900 that will end up being the take profit area. If you don't feel comfortable with riding it all the way up to 3,900, in which I don't know why you wouldn't be, because we've shown that it's proven that if it does break up, then it can go up there. But if you're not comfortable with that, 38.60 will be the next area where I would say look at being able to get out as well. So you have two take profit locations when it comes down to this: 38.60 and 3,900, which will end up being the two take profit locations when it comes down to that. Everyone, I know that the market's about to open up. I'm going to get out y'all here when it comes down to that. I hope everybody ends up having a very good trading day. Please do not take a trade until the market breaks out of these consolidations. July is very synonymous for losing money in consolidation. Wait for the breakout, allow the market to be able to move, and then after that, capitalize on the movement once the market gives you a direction. Like always, plan your trade your plan. Everyone, I'll see y'all in the next video. Take it easy.